Hi, everybody. Welcome back for another episode talking about everybody's favorite topic, which is tax planning. And my number one message here is, as an entrepreneur, it is always tax season. It is evergreen. It doesn't matter whether it's January, July, or December, it is tax season. And not tax season from the compliance standpoint, but from the perspective of tax planning. So looking at what do you have in front of you as far as major decisions at year end for your business? Should we choose to accelerate purchases of equipment, different types of expenditures into this tax year, or should we let them go into the following tax year? Looking at what do we have in front of us over the next 3 years? When would it make more sense to recognize income so that we're not blowing it out in terms of taxable income on any given year? Or should we really look at maybe we want one really high tax year and one lower tax year because we're going to recognize some capital gains from somewhere else, and your capital gains tax rate is affiliated with what your personal income rate is if you have a pass-through entity. All kinds of different decisions that need to be made, but the best time of the year to connect with a tax team is typically after the corporate filing or extended deadline happens in October of every year. So late October, November, December are great times to connect on year-end planning, but then also much earlier in the year having a multi-year planning process and saying, okay, what's our operating strategy inside the business? What do we think we have in front of us? What decisions need to be made? And what's our exit plan? Has that changed? Are we going to be transferring any equity units, et cetera, et cetera? Those are all major components of tax planning that you really want to be taking advantage of and making sure that you have a vision for what's going to happen inside your business every year. Also thinking about retirement allocation. Do you want to create or allocate to a 401k plan for your company? What about a SEP or other types of retirement or executive comp vehicles? Those are certainly available. If you're putting equipment into service, are you going to be able to take advantage of bonus depreciation where you're able to expense most of that purchase in the year in which it's put into service and a little bit gets depreciated, or are you going to be depreciating that over a normal schedule? All of those are really good tax planning questions to bring up with your CPA team so that you're not making business decisions sort of without that knowledge, so that you're not making business decisions based without taxes at the center of it, because taxes are something that we have so many more levers to pull as a business owner than most people do as employed W-2 folks. So think about your tax planning, think about where you are in your annual cycle. Feel free to reach out to us here at entrepreneurline.com and also reach out to your CPA team and make sure that you're looking at what's happening this year, next year, and the years to come so that you have a really good integrated tax strategy. Head over to entrepreneurline.com. We have a much deeper dive article on this topic and lots of articles on tax. So anything that we can do, feel free to head over there.